Assessable income generally only becomes assessable when it has been derived by the taxpayer. In some instances, income is accounted for on an accruals basis. In this case, it is derived when it is earned and there is a right to receive the income. In other instances, income is accounted for on a cash basis. In this case, it is derived when the income is received. Salary and wages are recognised on a cash basis. Derek receives his monthly salary in arrears on the 15th of each month. He is also paid a bonus on 5th of July for work undertaken in the previous tax year. In Derek's case, his salary and bonus are accounted for on a cash basis, and so are derived when received. The June salary payment is derived in the first tax year. The July salary payment is derived in the second tax year, even though part of the payment was earned in the first tax year. Similarly, the bonus payment in July is also derived in the second tax year. Income from property, such as interest, rent and dividends, are also recognised on a cash basis. Jane receives interest income from her bank deposit on the first day of each month. Jane would derive the income on a cash basis. As such, interest income earned in June but only received on 1st of July would not be assessable in the first tax year. The interest would be assessable in the second tax year. However, if the interest or rent is earned in the normal course of carrying on a money lending or landlord business, then it is recognised on an accruals basis. XYZ Bank receives interest income from borrowers in arrears on the 10th day of each month. The bank would recognise the interest income on an accruals basis. Interest income accrued up until the last day of the tax year would be assessable in that tax year, even though part of the amount will only be received 10 days later. Income received as a prepayment for services not yet delivered is generally recognised on an accruals basis and only derived when the services are delivered. This will be the case where the business accounts are prepared on an accruals basis and there is a possibility of customer refunds. Dancealot is a dancing studio that prepares accrual accounts. It receives prepayments for classes from its customers, which are treated as unearned revenue liability until the services are delivered. If the customer stops taking the classes, Dancealot refunds the remaining monies to the customer. In this case, Dancealot's income is derived when the services are delivered and not when the monies are received. However, if both conditions are not fulfilled, then the prepayment will be accounted for on a cash basis, and the income will be derived at the time of receipt. DriveMagic is an online customer management service that prepares accrual accounts and charges customers annually in advance. Once payment is received from customers, no refunds are made for customers wanting to cease using the service. In this case, DriveMagic does not meet the second condition relating to the possibility of customer refunds, and so the income is derived when received. Businesses with trading income will derive income on an accruals basis when the income is earned. This includes business income from the sale of trading stock, the use of business capital, and the services of employees. TeachTech develops online training resources and licenses them to training organisations. As TeachTech earns business income from the use of its business capital, it derives income when earned. The derivation of income from professional services will depend on the nature and terms of the services and the size of the practice. For smaller practices that primarily generate income from the personal exertion of its owners, then a cash basis is appropriate. Josie is a professional accountant who runs a practice along with her part-time admin officer. Josie's income from professional services is likely to be derived when received. For larger practices, where more substantial operations that constitute the carrying on of a business, the accruals basis will be appropriate. Pro Partners is a large accounting professional practice with a number of partners, senior accountants, junior accountants and administrative staff. It is considered to be carrying on a business, and its income from professional services is likely to be derived when earned. Interestingly, with the accruals basis, it is possible that derivation has occurred even though no cash has been received. This is because income is recognised when the taxpayer accrues the legal right to receive income, such as when services are performed or goods are delivered. This outcome should be carefully considered during contract negotiations relating to payment terms. To recap, assessable income generally only becomes assessable when it has been derived by the taxpayer. Income accounted for on an accruals basis, such as business income generated from trading stock and services of employees, is derived when it is earned and there is a right to receive the income. Income accounted for on a cash basis, such as salary and dividend income, is derived when the income is received.